Hi, I'm Jason Wilson with Ursuline Associates. In today's video, we're going to cover the market data from fourth quarter so we can predict your 2024. Is it a time to sell? Is it a time to buy? If you would like our free ebook that gives you what you need to know to win buying in the 2024 market, or how you can maximize your property's value for sale if you're listing in 2024, subscribe below and comment. You do those two things, we will send you our free ebook. If you want a free consultation of what it's like to get a strategic plan for you, whether that time is for now or you're going to buy or sell in the future, please also just reach out to us. Thanks so much. Now let's get into this data. Hey everybody, today we're going to be going over the statistics from fourth quarter. We're well into first quarter of 2024. Obviously, the market has kind of shifted itself somewhere after April of 2022. A lot of 2023 was very up and down. We did see interest rates as high as 8%. And we always like to go back and look at the last quarter to see how these changes actually affected the market, right? Because there's leading indicators and lagging indicators. So in today's video, what we're going to cover is some specifics on our local area and the number of solds, like the change in the amount of units that have sold, the change in the median sales price, and kind of look at some of the predictive analytics of what we think will be happening here in 2024. All right, let's get into this. Okay, so what we can see here is we're going to be going through this compiled data that is compiled from the FMLs, and this data is, in some cases, is broker specific, in other cases it's not. We'll just take a look at it and kind of talk through it. So the first screen that I want you to see is, this is the layout of all of the counties broken into areas. Like, for example, Cherokee County is area 1, 2, 3, and 4. So one county is 4 areas. They did this specifically so that they could isolate the data, so we're not just saying here's all of Cherokee County, because you're going to get different areas of Cherokee County that do different things. So we want to make sure that we take time to kind of explain that. So right here on the screen, you'll see area 1, 2, 3, and 4, and that is going to be the Cherokee County area. When we go to this is the change in the number of solds that have actually taken place. I'm sorry, actually just the number of solds. How many units closed in Cherokee County in fourth quarter? Fourth quarter is always historically lower, so that is one thing that we do notice here with this. Notice Northwest Cherokee was 195. Northeast Cherokee was actually down to 138, which later you'll see the Northeast Cherokee section actually, even though the units were down, is one of the areas where the median price point has actually climbed fairly significantly. Okay, so Southwest Cherokee, 218. Southeast Cherokee, 215 units. Nothing too notable to report other than there's a lot less in terms of closed transactions. You'll also can see the data for Cobb County and the other surrounding areas. All right, so we come back to this, and this wants to give us the change or the percentage of change in the numbers of sold. So as you can see, area 1, 2, 3, and 4, area 1 is in yellow, which is a 0 to 14.9% change in the amount of units sold. That is no increase all the way down to 15% decrease. You're going to see that in both 1 and 4. In area 3, you're going to see a decrease of greater than 15% all the way up to 20. So that doesn't mean prices fell. What that means is there are actually less units being sold in those areas. The green area is actually 5% more, although in the previous screen that we just looked at, we noticed that it's the fewest amount of units. So 138 units sold in that northeastern section, which is the fewest amount of units, yet it is greater than 5% increase over what it did in the prior year. All right, so this is just another graph to show those percentages right down to it. It's 9.7 down in the Northwest. In the Southwest, 19.35, right on the 20 mark. 6.5 on the southeast, and 7% up on the northeast section in terms of units sold, even though the fewest units sold in that area. All right, median sales price. This is something that we really want to pay attention to, especially if you're an investor. If you're an investor, you have to follow the median sales price. So median sales price will take out the highs and take out the lows, because the average sales price will always be affected by extreme lows and extreme highs. For example, if there is a very small percentage of people that have bought in the multi-million dollars, if you put them in the averages, it skews the numbers. So they chop off the highs and the lows and stick with the middle section so that you can get a median, which is more like an average of the middle, would maybe a different way to say that. And with that, what you can see here is that Northwest Cherokee, so that's going to be your Canton area, is 475,000, which is kind of close to where the United States is as a whole in terms of its median sales price. But the Northeast Cherokee, even though it was up by 5%, give or take, actually I think it was 6 point something when we looked at the last screen, $670,208 is the median sales price in that area. It might account for why there's also less units. Southwest area, 435. Now that's going to be really on par with the United States in terms of median sales price for the overall U.S. So the Southwest Cherokee area is probably pacing more with the country's pacing in general. And then Southeast Cherokee is going to be the 450 mark. Okay, so what we have here is median sales price broken down by price point. You can see the nomenclature on the left. Your tan colors are 400 to 499. Your yellow is $500,000 to 699. 700 to 999, well, to $1 million basically is your green, and your hunter dark green is $1 million or more, which you're really starting to see that buried into the center of Atlanta for median pricing, meaning there's going to be $1 million properties in all the different sections because there's outliers, but they're not in the median range. All right. Okay, change in median sales percentage. So we want to know, is the median price going up or down? If you watch some of the YouTube information that's out there, it'll often talk about how everything's crashing. There are price reductions happening, and that's an entirely different slide. But what we want to look at here is, did the median sales price go up or down, right? This is some of our lagging indicators that will tell us if overall prices are falling or climbing in general. What you see here is in Northwest Cherokee, it was up 8.6%. Northeast Cherokee was up by 34%. This will have probably a lot to do with larger estates up there finally trading hands, where you have 15 acres and a luxury property that might be contributing to that median sales price, although they do cut out the real high stuff. But if you have more luxury properties, then the median price goes up because there aren't a lot of entry-level $300,000, $400,000 houses in that area. Okay, so that was 34%. That's insane. Southwest Cherokee is 3.1, and Southeast Cherokee is 5.9. Across the board, Cherokee County, fourth quarter, median sales price went up, not down. Doesn't mean that it's not, a crash isn't coming. It just means that it did not currently reduce. Okay, so this is the percentage. So this goes back to numbers, right? Everything's more than 5% increase, which we just talked about. And the days on market. All right, so these are the average days on market for each individual section. The highest being 36 days on market for Cherokee County with the Northeast. The highest in all of the Metro Atlanta looks to be Sandy Springs inside the perimeter, because there's ITP and OTP. So 46 days, which is also matched by Southwest Atlanta. Okay. Change in days on market. So you can see that the days on market have actually fallen by 35% in the Northwest area, and then in the South we're in the 40s, with the exception of that Northeast Cherokee where it actually increased by 12.5%, which makes sense because the median sales price is so much higher. There's fewer buyers in that price point. All right, sales original list to sales price. So this is if they put it on the market for $1 million on average, with the ones that had to make price reductions versus the ones that didn't, what are they getting for the property? And that would be in Northwest, it would have been $980,900, and so on. You can see they're all really close together. There's not huge discounts. You're not seeing stuff fly off the shelf for 10 and 20% under what their original list price is. Now, this does not mean that if they were listed at $1 million and they lowered to $800,000 that they got $798,000, because it's based off of original list price, meaning if they started at $1 million and they sold for $800,000, that would register at 20% below. Okay, moving forward. So now what we've got is points of change in percentage sale to original list price. So this is showing that did it go up or down in terms of the percentage of the original list price that they were getting versus what it did last year and or the quarter before. I believe this is a year over year view of this. That's one thing I'll have to look into, but you're talking 2.2%, which would mean that it increased by 2.2% of the original sales to list price, which arguably would mean if it sold for, if it was listed for $100,000 and the statistic was 95%, then it would have sold for $95,000. This data for Northwest Cherokee means that it would now have sold for $97,200, which is 2.2% closer to its original list price. All right, incidence of price reductions. You're going to see this to be pretty high. It's not overly bad. You're under 50%, but we just came out of 2020, 2021, 2022, where stuff was flying off the shelf. And so the incidence of price reductions have increased because behavior lags. If your behavior is put it on the market for $500,000 and get $600,000, then the next guy goes, well, I'm going to put it on the market for $600,000 and expect $630,000. When that stops happening, doesn't stop the next guy for trying for $650,000 and then finally sells for $580,000, which is still more than the previous sale. It just means the acceleration stopped happening. Points of percentage of change in price reduction. So the amount of units that got required fewer price reductions is in the negative. Required more price reductions is in the positive. Cherokee across the board actually required less price reductions, which tells us in fourth quarter, people were starting to get realistic about their pricing and getting it more on target, or the market was starting to move better as as interest rates did start to drop towards the tail end of fourth quarter, allowing more buyers to step into the marketplace and requiring less price reductions. I know this is a lot of data. It's extraordinarily boring, but it's important that we know this because this is what predicts when we come to your house to talk about listing your property for sale. We want to make sure that we're watching what the data is doing so that we can interpret it, because if we take the wrong approach, what can happen is days on market, time on market can give buyers the impression that your property has issues and needs to have a discount when it might just be the strategy that was employed in the beginning on the listing of the property led them to believe that, where we can avoid that by looking at the data and using it to predict how buyers will behave. If you're a buyer and you're in the market, then this also tells you what room to negotiate you have, where the best deals can be found. So all of these things are very important, albeit sometimes ridiculously boring. Okay, month supply. This is a great metric. The number one, I'm going to call it leading indicator that will show a shift in the market, but it's the last of the leading indicators right before you really feel it, where prices are going to fall. And I shouldn't say shift in the market because the market can shift without this indicator necessarily coming into play till later. However, but everybody asks me, when will the market crash? Like, that's the number one thing I get asked all the time. And the answer to the question is really what would cause the market to crash is really the correct question. The answer is, I don't know. And how we will know is when we exceed 6 months worth of inventory. What you can clearly see on this screen is in Cherokee County, we've climbed up to 2.9, where we were in the middle of 2021 down to like 3 weeks. So it has increased dramatically. So that's an indicator you want to watch. That means things are more negotiable. But when it climbs over 6 months worth of inventory, meaning when they stop listing properties at the current rate of sales, it will take 6 months for all the inventory to sell. That's what you call a balanced market. When it goes above it, that's where the bottom falls out. Now, this can happen gradually, or this can happen dramatically. That's why it's really not predictable, but this is one of the key metrics to watch. Supply and demand is everything. So in the last crash that we had around for me, it was like 2006, 7, and 8. Up here, it was like 8, 9, and 10. But in the Florida market, what we knew was that inventory was so incredibly low that an area that could support, 40 to 50,000 listings in the Metro Orlando area had just 5,000 active listings at any given time, and it was operating like hotcakes. When that shifted, we jumped from 5,000 to 15,000, tripled. It was still dramatically under what the demand was, but that was the indicator. When that happened, it kept climbing, and as it hit that 6 month mark, everything stopped. It was like somebody shut off the faucet. Here, it jumped and then hovered, right? If it jumps and continues to climb, pay attention to these numbers. If 3 becomes 4 and then settles, and 4 becomes 5, then we are headed in the direction where prices will start to become weaker. Okay, so this is another screen that shows it just in a different way of 1.4 months to 1.5 to 1.9, just kind of gives you the color nomenclature for that. Now we go into percentage of sales with multiple listing periods. So this is going to show everybody that listed their property and they failed to sell and they had to come back and relist the property. In the northern section, that was greater than 25%. In the south, it was less than 20. So that's for Cherokee County. If you want to look all the way down, you can actually look towards Midtown was greater than 41%, or right at 41. So that gives you a good idea of how many times, and that could just be that they hired somebody for 2 months and then pulled it off the market and relisted it. But in most cases, it's where they listed the property for whatever the time was, 90 days, 180 days, it didn't sell, and then they had to hire somebody else that took a different approach, like we were talking about earlier, to get the results you want. So arguably, could you say, does it matter what price you could put? If I can put it up for $1 million, because then I can always come down. Well, the always come down actually can cost you money, where if you price it correctly, you can get a better bang in a shorter amount of time. Unequivocally, the data shows the more time your house sits on the market, percentage-wise, the less money you get. Okay, so this is the amount of failed listings. So listings that went on the market, didn't sell and expired out or were withdrawn. That is 34, 42, and then in the south, 20 and 22 as far as Cherokee County goes. So this is a great stats to just kind of show overall what happened. So the number of solds in Cherokee County specifically was 8,158 units. That percentage of change year to date was down by 11.3%. So there's fewer units selling. And then it breaks down each area. You've got negatives in the Northwest, Southwest, and Southeast Cherokee. And you have an increase in the Northeast, which blended together equals 11% down overall. Foreclosure percentages did climb a little bit. We actually reached 1%. A healthy economy is between 2 and 3. The height of the market, I shouldn't say the height of the market, the height of the crash, when we were in the middle of distressed properties, it was like 40 to 50% were distressed or foreclosure. Right now, you just don't have any. Distressed properties are also showing around the 1% mark in there. The median sales price overall in Cherokee County is $440,000, which is on par with the country's median sales price, which I believe came in at $435,000. But remember, this is a blend between the 4 areas. You can see that we have $450,000, $475,000, and then in the Northeast and Southwest, you got $670,000 and $435,000. You'll also notice in here the change in the numbers of days on markets has dropped by 10%, with the exception of the blend of Northeast, where it went up 12. So really, it actually dropped 35% in some areas, 40 to 41% in the southern areas, which when they blend it together is overall 10. Realistically, it's up 12% in the Northeast. Anywhere in South Cherokee, which is going to be your Woodstock, Ackworth, perhaps the edge of Holly Springs, all went down, significantly in the days on market. In other words, the pause just kind of moved. Across the board, the blended average is 97.7% of original sales price to, original list price to sales price. Meaning, simple numbers, if they all listed at $100,000, on average, they sold for $97,700. And then you can see the breakdown there. Percentage of price reductions was in the 40s. The points of change in the price reduction was down 6.7%. And percent that were previously listed blended out to 23, and there's an average of Cherokee County being at 2.4 months. In the north, it's 2.9. In the south, it's under 2. All right, now we're going to come into this. We're going to go changes versus same period last year. You're going to get some more data. You can show the green is better, the red is worse, and then you have the non-applicable, which doesn't even show up in there, or the not significant numbers, and the amounts of supply, and per price point, per area. You can see there is an improvement in the $750,000 to $900,000 range, and it's worse in the under 100, which almost is non-existent anyway. All right, so this is going to be just an example of, well, this is specifically the area of Roswell. These are put in the slides because these slides are interchangeable. We can go in and move the data around and dial it into a specific area. So that's just designed to show you that we have that capability. All right, so that is the end of this part of that presentation. So what you're gonna see here in this data set is overall inventory is still significantly low. It's at the 3% mark, so it's halfway to a balanced market. Number two, prices are still increasing. The median sales price is up, not down. And in most areas, the amount of days on market, the speed at which they're moving have actually decreased. So this kind of leads to an indicator that if you couple that with rates having come down a little bit, then they started bouncing back up again. But the Fed saying they're going to lower the rates 3 times this year doesn't mean they will. But if they do, or they hold flat, we're probably going to see an increase in the amount of activity and the amount of units being sold come through spring and summer of this year. And if interest rates drop, we'll probably see a frenzy again before that goes. So to answer the question of what would it take for a market crash to happen, well, we have some of the makings. Higher interest rates will generally make assets fall, right? That's just one of the metrics, if you watch these charts long term, that you will see. If those rates that have come up and they have this lagging effect where they're slowing markets down and shifting it, this will affect the speed at which those assets are climbing or at the rate which they'll fall. So let's put this in a different way. If, for example, everything was climbing at a 15% appreciation rate, which is not sustainable, and the interest rates came up so high, but the demand was low enough that we weren't seeing prices fall out, meaning they didn't sell for 10 or 20% less than they previously did. But what that did do was decrease the speed at which they were appreciating, right? So that is a fall, right? So when assets get cheaper, when interest rates go higher, you have to look at the overall spectrum. Like, here's the line. This is what the pricing is. If the pricing is climbing above the line by 15% and those interest rates come up and they want to cause a dip by slowing it back down to even zero, flat, that would be considered decreasing the price of assets, because the pace they were going, they would have been 14% higher. Now, if they drop below and the median sales price actually goes down, let's just say 5%, and last year was up 15%, that's a 20% swing in how the assets are being priced based on the interest rates. So we have to watch these things. So if you're thinking of selling or buying in this market, you really want the strategies that it's going to take to get in front of this. If for a buyer, everything you need to know to find the best deal possible. For a seller, how to approach the market and appeal to the psychology of the buyers in here, presenting a product in a win-win situation. In the description below, I have 2 free ebooks. If you go ahead and send us a message and subscribe, we do those 2 things, comment and subscribe, we will go ahead and send you both of those ebooks. It will talk about how to win in 2024 as a buyer and how to win in 2024 as a seller. As always, if you'd like a free consultation with no obligation, give us a call and we will go ahead and set a time to sit down with you in person or over Zoom, depending on where you're at, and talk about your options and create a unique strategic plan for you. Thanks so much for hanging with me through this difficult data. It's like watching paint dry, but I appreciate it because it is important, and we hope to talk to you soon. Thanks.